When it comes to investing, there's a massive misconception that you need to be loaded with cash or just have $1,000 lying around to even think about getting started. But let me set the record straight. That is nothing but a myth.
What?
In fact, it's so far from the truth that you can learn to invest with $10 or even less, and I'll show you exactly how in this video. According to Forbes, investing is all about buying assets that grow in value over time, giving you returns in the form of income or capital gains. It is essentially a cool way to make your money work for you. Now, if you're a teenager like me, you can't legally open an account for yourself because you're not 18 yet, so ask your parents to open up a custodial account, which is essentially a special account that they create for you with a broker like TD Ameritrade, Charles Schwab, or any of those. And then you should be good to invest. There are plenty of different types of investments out there, but for today's purposes, we're going to stick to one main type, which is stocks. For those of you who are unfamiliar with stocks, stocks represent a small slice of ownership within a company. Companies issue stocks to raise money for various purposes like expanding their operations or paying off their debts, and individuals like you and me can buy these stocks. Now, how do you make money from stocks? Well, there are two primary ways you can do this, through dividends and capital appreciation. Dividends are payments you receive from the company just for owning their stocks, and you can imagine this as your slice of the company's profits. Capital appreciation, on the other hand, occurs when the stock price increases from what you initially paid for it. And what makes stocks such a great investment is that on average they grow at least 10% per year.
Money! Money! Money!
Big myth when it comes to investing in stocks is that you have to have a lot of money to do so. But that's the reason why it's a myth. It's not true. Right now I'm going to reveal two powerful investment strategies to use when investing with small amounts of money. The first investment strategy is to buy fractional shares. But what are fractional shares? Well, they're bite-sized pieces of stock. You don't have to break the bank when it comes to fractional shares because you can invest with just a few dollars. Instead of paying $260 for one full Tesla stock, you can dive in with as little as $5 in Tesla and another $5 in Apple. It's perfect for those of us who are working with tight budgets. But the magic doesn't stop there. Depending on which stocks you own, you can still receive dividends on your fractional shares, adding a bonus to your investment. And here's the kicker. It's the ultimate diversification tool. You can spread your investment across various sectors without needing a fortune. Now here's something to note. Not all brokers offer fractional shares, so you should choose wisely, and you can consider options like Charles Schwab, which does offer fractional shares to buy. So whether you got $10 or even less, fractional shares are your ticket to stock ownership without breaking the bank. Now let's talk about investment strategy number 2, which is dollar cost averaging, DCA for short. With dollar cost averaging, you invest a fixed amount of money in stocks at regular intervals, whether that's weekly or monthly. And here's the cool part, the amount you choose to invest is entirely up to you. It could be as little as $1 per week if you wanted it to be. Now, why is dollar cost averaging a game changer? Here's how. Number 1, it averages out the cost of your investment. So you're buying shares when prices are both high and low, resulting in an average that's often lower than just trying to time the market. Number 2, lowers your risk. It's a risk reducer. Dollar cost averaging allows you to buy more shares when prices are down and fewer when they're up, reducing your overall investment risk. Number 3, it's perfect for ETFs, especially if you're eyeing exchange-traded funds, which are a great way to diversify your investments. ETF bundle many stocks into one package, making them reliable and low risk. Now imagine this, you invest $5 every week into an exchange-traded fund like the S&P 500. With dollar cost averaging, you're consistently snagging more of the exchange-traded fund when the prices are down than when they're up. It's like a stress-free saving plan that works with whatever amount you have on hand, even if it's $10. So there you have it, dollar cost averaging is your golden ticket to start investing with small amounts like $10. There's no need to stress about having a large pile of cash up front. With dollar cost averaging, you can grow your wealth gradually with one affordable contribution at a time. Now it's your turn to take action. If you found this video helpful, don't forget to show your support by liking, commenting, and subscribing for more valuable content. And thank you for tuning in. I can't wait to see you in the next video. Goodbye.